Knowing what the individual candlestick formations represent as far as investor sentiment allows investors to have a much more clear and aggressive approach to when they should be in or out of trades. As we saw in the Dow today, it was another indecisive trading day, forming a doji in a very flat trading range, still in this downtrending channel. After hours, it was reported that the Koreans have fired another missile which went over uh, the island of Japan, and the pre-market or the aftermarket futures are trading way lower, giving us a good impression of what we should do after a doji. It doesn't matter what the cause is that creates investor sentiment movement. We can see graphically what that investor sentiment is actually doing. Our recommendation today, even though the market was fairly lethargic in its trading day, was in lumber liquidators because it had this fry pan bottom, and when it opened positive today, it told us two things. One, it was breaking out of the fry pan bottom with stochastics heading up, and two, it wasn't going to resist at this level, meaning there was a good prospect that we now have a wave 1, a wave 2, and wave 3 being the same magnitude as wave 1. Again, the candlestick charts not only tell us which direction a price will move, but when we apply what happens in investor sentiment, like gapping up through a resistance level, it informs us that there's a great force in this new wave that's going to produce very good profits. That same scenario can be applied to our recommendation last week of ESIO. You can see the slow curve. You can see the breakout through this level. So we basically knew we had a wave 1, wave 2, with a breakout into wave 3. Now there's very simple strategies using candlestick analysis telling you how long you stay in and when you start taking profits. For example, we know we're in the overbought area. We constantly have our safety stop at the previous day's open. It shouldn't have enough sales force to come back down through there. If it does, that means the seller's in control. How long do we hold this position? Right now until we see a candlestick sell signal. And it does not matter what stocks you're trading, whether it's a dollar stock or a $500 stock. As we can see in something like Amazon, when they gap down through the T-line, good situation to go short. How long do you stay short? Same scenario. You stay short until you see a candlestick buy signal and a close back up above the T-line. Candlestick analysis is merely the graphic depiction of what's going on in investor sentiment. The Japanese rice traders provided us with not only the identification of the reversal signals, but they also told us what the psychology was that created those signals. This combination allows an investor to have the same grasp as far as analyzing a price trend as somebody that's been trading in the markets for 50 years. That'll be it. We'll see you in the chat rooms.